How much of a surprise was this Macys number and release?
I think the Macys number, the comp may not have been a surprise, but the impact on earnings is the surprise. Where's the margin and where's the flow through is the key question, I think, for 2019. With gross margin down and SG&A up, that's not the equation that you want to see. The weakness that they had and the underperformance in certain categories, combined with a fire in a fulfillment center and a promotion that didn't work, was an impact. And an impact when transactions were up and yet international tourism do a little bit better, they couldn't recover from it. There's a lot of work that's still to be done.
So many questions, Jan. Macys problem or broader consumer spending problem?
Oh, it's not a consumer spending problem. Consumers fine. The 5.1 number MasterCard put out, that's a good number. We had a strong consumer. And it's not just a Macys problem. I didn't think any of the releases today were very good. They weren't awful. They ranged from okay to not so great. Even the Target release, which was strong on the top line, they didn't show any increase in earnings. I mean, they didn't raise their earnings guidance because of that. So even in that case, it wasn't great. And when you looked at Kohl's, it was just okay. L Brands, I thought, was a disaster. Bed Bath & Beyond, they got the most bang for the buck, but you know, they were down 5% store for store in store. So it's not like in-store sales were strong for them. This has been an online business, an off-price business, and it's been a local business that hasn't been a big company business other than online.
Let me get to Oliver, actually, then. Do you agree with Jan there? I mean, we're all trying to sort of sort through the idea that the question Sarah asked, which is consumer reflective of a weaker consumer than anticipated, or really specific more to these names and the trends we've seen for years now?
Well, we are seeing a strong consumer in terms of low unemployment and wage growth. However, this is really a mixed bag. As you think about retail, you think about on-mall being Macys and off-mall and others that aren't in the mall, including Target and Kohl's, performing better. Also, apparel's been a tough sector. Women's sportswear was tough at Macys. And keep in mind, we had a long holiday period between Christmas and Black Friday. So what happened was shoppers took a little pause in the middle. But just taking you back to stocks and what you should do now, we like Target, we like Kohl's. We think the Target number at plus 5.7 was very robust. And we think broadline retailers such as Target and Walmart are great opportunities to own the strong consumer. We are more cautious on the high end. Luxury goods could be negatively impacted by the S&P performance. And tariffs as well as margins are something to watch out for. Underscoring holiday this season, digital sales were quite good. They were up 29% at Target. They were up double digit at most retailers. But again, Macys being on mall, Macys being an apparel retailer, those are tough structural places to be. And that is a little bit different from the Kohl's story, which has done a great job in active, and Target, which has done great with toys, home, baby. Toys R Us was a market share opportunity this season as well. So there's a lot of cross currents here, but there are some good stock ideas.
So Dana, is that how you think about the difference between Target's better sales and Macys' worse sales? Is it just simply that they're in different categories and some categories are doing better than others, or is Target executing better than a Macys?
I think one of the things you see between Target and Macys, look where Target is located, like Oliver said. Their locations definitely are a benefit from them. It's a higher cost of doing business today than what it was in the past with digital. Target's online penetration isn't as great as Macys. And overall, what we've been seeing is that lower to middle income consumer who's gotten a pop, the new brands that Target's brought in have been compelling. With Macys, there's a lot of work that's being done. And whether it is the in-store initiatives, the Growth 50, the backstage, they allocated more labor to drive the sales, and you have to balance out the cost with the level of sales increases you're getting. I think there's still a lot of work to be done in terms of where's the margin. For every one of these companies, margin flow-through is going to be the theme of 2019 in the face of what continues to be a strong consumer.
Right, okay, strong consumer, but margins, as you point out, Dana, the key, and certainly not great for Macys. Jen, who's going to be the beneficiary here then? You know, when I see Amazon's numbers or Walmart's numbers, am I going to see that there is success there?
There is no inflation in retailing, and there is rising costs. Everybody's facing that. The people who can handle that the best will do the best. Target proved that to us. Walmart will prove that to us when we see their numbers. But the problem is you can't pass anything through. Message to the Fed, there is no inflation. 70% of the economy is consumer. Consumers doing fine, but we can't get them to pay more for anything because there's an enormous oversupply. Apparel's not really the problem. Apparel was up over 7%, but apparel and where they're buying it is the problem. And we're not seeing any ability to pass through anything to the consumer. The mall is struggling. I agree with everything that Dana said and that Oliver said, but I will say that going into 2019, every quarter is going to be slower than the quarter before because we're going to rotate through this benefit from the taxes. So we're going to see a good first quarter, a not as good second quarter, a slower third quarter right through the end in retailing. But it's not the consumer itself. The consumer is fine. They're all working, their wages are going up, they're fine. The problem is the cost structure in retailing is dramatically going up.
I would say
Oliver,
who's going to win in retail?
Go ahead.
Value being a key theme. Value means off-price. Value means Costco. Value also means a $10 membership at Planet Fitness. So as we think about the future of retail, it's offering really compelling prices and having the margin structure and planning to offer those low prices to consumers like a Costco, like a Planet Fitness. Also, as you know, Sarah, Kylie Beauty, Ulta Beauty. Ulta Beauty, beauty is a great category with the selfie generation and a lot of innovation we're seeing with digitally native influencers and strobing and contouring. So beauty is another powerful sector as well. So there are ways to own retail, and retail is back. Retail's really going to use stores for fulfillment. All of Target's online growth was driven by drive up and using stores as fulfillment. So the future of retail is stores. Don't count retail out. There are selective good opportunities.